Send in your queries using the hashtag AskBQ to bloombergquint.com. Write to us now. Use the word Ramdev in all your queries.
Hello and welcome. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. It's a volatile start to the new summer. The Nifty comes off the day's high to trade below the 10,150 mark. Telecom stocks are buzzing in trade after Reliance Jio hikes customer tariffs. Bharti Airtel gains for the fourth time in 5 sessions and is also the top gainer on Nifty. Bhushan Steel is locked in upper circuit after ArcelorMittal shows interest in buying out the debt-laden company. And Reliance Industries becomes the first Indian company to cross the 6 trillion mark in terms of market capitalization.
Well, and Reliance and telcos are the story if you're looking at the gainers today. But yeah, first, the story is the index, and we have come off yet another day when we started off okay, but midway through trade, there was a bit of a crack. And post that, we just came off. And the culprit, the financials, quite frankly. Before we get to what's moved and what's not, just want to bring up what the broader end of the spectrum is doing. And yeah, precious little as well. So flat for the Nifty 100, flat for the BSE small cap index as well. And now the heat map will come up on your screen. The advanced decline ratio too will come up in a bit. But look at the heat map and you will see what I was talking about. There is strength in Reliance. There is strength in Bharti Airtel, and essentially shows that there is strength in Telecom. Idea, Bharti, Arcom, and Reliance Industries, the big boy, continue to rise and shine. And stocks like from the cement space like Ultratech Cement and to an extent ICICI Bank are up and about. But they are being dwarfed. The gains by a lot of these names are being dwarfed by what's happening to financials. HDFC is down 2%. Yes Bank, Axis Bank are down about a couple of percentage points as well. Bajaj Finance corrects yet another 1.25%. Kotak Bank is down about 1%. So clearly shows that financials are the main culprits. Just before I hand it over to Navneet for what's happening at the broader end of the spectrum, I want to bring up the contributors plate and you will see what I'm talking about. Yes, Reliance is on the top of the mark. ICICI Bank is contributing, but look at how the financials are dragging the index down. HDFC 13 points, Kotak, Axis between them about 7 odd points, and throw in an ITC with about a heavyweight with about 6.5% fall. And that just shows how the financials are negating almost everything that either the IT pack today or the telcos are trying to do. So not a happy hunting ground today for the financials, but Navneet, I don't know what the state of the mid caps is. If they are flat, but individually, steel names and some of the others are actually doing rather well for themselves.
Well, that's right, Neeraj. A couple of the pockets in the broader markets are doing well. Let me first start off with the theme, and that's been the telecom stocks throughout the day. And not only today, we've seen substantial jump coming up for stocks like Idea and Bharti Airtel. So if you look at today, Idea and Reliance Communication, both are your top F&O gainers as well. Idea up almost 7%. Reliance Communication also seeing strong gains of almost 7%. Bhushan Steel and Uttam Galva are the other two stocks which have been in focus right from the word go in the morning. There was a report suggesting that ArcelorMittal has submitted expression of interest to acquire assets of Bhushan Steel. That's been locked in upper circuit. But look at Uttam Galva. Now, that's the counter where ArcelorMittal holds about 29% stake, and they are also the co-promoter in Uttam Galva. On back of that news, there has been a rub-off effect seen for Uttam Galva, up almost 15%. Couple of earnings reaction coming your way. So, Zuari Agro has declared its numbers a while back, and both the stocks, Zuari Agro as well as Zuari Global, which holds stake in Zuari Agro, have been locked in upper circuit, both stocks up almost 20%. Let's talk about the new kid on the block then. IEX had a tepid listing, but in the intraday session, we did see some sort of surge coming about, but the stock still quoting cuts of almost 1%. And lastly, the theme has also been for the real estate counter. So look at stocks like Sobha Limited, Suntec Realty, Kolte Patil, Purvankra. All these stocks have been buzzing in today's session, Neeraj.
Well, okay, so that's a set of names which are doing the rounds in the session today. I must say Bharti Airtel clearly stands out in terms of performers. 8-year highs for the stock. Pull up the Bloomberg chart for the counter. This is, of course, today's move. If you look at the last 8 years or 9 years, since 2008 or 2009, I think you'll see the kind of moves that Bharti Airtel has made. It's been one stellar set of moves the last fortnights or thereabout, which is quite exceptional for Bharti Airtel. This is a 12-month performance, but the large move is over the last few months, and this is what I was referring to. This is the long-dated Bloomberg chart, and you will see that it's made this high after a gap of almost 8 years. Just shows the kind of mood that telcos are in particular Bharti is in. It's not the same thing with Idea, but Bharti is clearly in a mood of its own. Reliance, needless to say, is also trading close to 8-year highs. So the two big telco players are doing rather well for themselves in the session today. Just wondering, Navneet, how does the F&O picture look like for the telcos? I mean, I'm classifying Reliance as a telco, but Reliance and Bharti.
I'm going to include Idea here as well. In the last few trading sessions, we've been observing there's been a lot of open interest build up on the long side for both Bharti as well as Idea. And Reliance has been the strength of this market, the kind of rally which we saw towards the 10,200 mark. Overall, if you look at the F&O picture, clearly it's reversed from the rebound which we saw at the opening session. Now, if you look at the options data, looks like the expiry could happen in that range of almost 10,115-ish to about 10,250 on the upside. There's been a lot of open interest build up, same for the 10,200 strike, almost 16 lakh shares added, and there has been an intraday unwinding, same for the 10,200 put, which has now shed 6 lakh shares. But in the first hour of the trading session, the strike had seen some sort of OI build up, and 10,100 strike is the one where almost 7.5 lakh shares have been added. If you go by the premium on the 10,100 put and the 10,200 call strike, it looks like the expiry can happen in that range of 10,060 to about 10,225 on the upside. And clearly, Neeraj, besides the telecom stock, it's also the IT counters which are seeing substantial addition in terms of OI addition. We know HCL will be declaring the numbers this week.
Infosys.
Infi too is up in trade, that's up 1%, but HCL particularly today, I've seen some jump coming about in terms of open interest.
Okay, so watch out for both of these. Infosys comes out post-market hours tomorrow, and HCL comes out pre-market hours on Wednesday. So Wednesday morning's trade, you will have two large Nifty IT names come out with numbers, and should be interesting as to what happens at that pocket. Okay, but our special guest for the day, Mr. Sudeep Bandyopadhyay, Group Chairman at IndiTrade Capital, joins us right now on the show. Sudeep, great having you. Thanks so much for joining in. I can't, Sudeep, not talk about telecom at the start of this conversation. As much as I want to talk about the markets, I'm starting off with telecom. For almost every single time in the last one odd month that we've thought that there is a spate of bad news, be it IUC, be it RelGeo's aggressive pricing or otherwise, the stocks have found a reason to move up, and move up they have in the last 1 month. I mean, what's happening? Is this recognition of something that the market was ignoring in the run-up for the past 1 month? I mean, why this strength, and can this strength last?
Well, Neeraj, thank you for having me. I think if you look at the entire telecom sector, it went through a really huge turmoil. Reliance Jio predominantly caused the turmoil. Of course, there were lots of government action which kind of destabilized and made them rework their business models. But having said that, if you look at the telecom companies today, I think the top 3 companies are becoming stronger and stronger. They have really done a huge amount of restructuring to make them leaner, make them more efficient, reduce their costs, shed their assets which are not relevant, not core. Overall, I think it's good for the long term. So whether you look at Bharti Airtel or an Idea, maybe after the Vodafone merger, it will emerge even stronger. And of course, Reliance Jio. These 3 are going to be the giants in Indian telecom market. And I have no doubt in saying that they will be the 3 companies which will take India into the long term as far as telecom space is concerned. Having said that, I think the recent or today's up move very clearly is on the back of Reliance Jio raising the rates, and the hope the market is finally having that probably the price war is behind us. And if the price war is behind us, the biggest gainer will of course be the largest player, which is Airtel. So obviously it's a big positive for Airtel. Also remember, the government is considering kind of a deferred payment structure for the fees which the telecom operators need to pay to the government, and they plan to spread it over a number of years. Of course, this is kind of in the realm of speculation. Nothing has been announced yet, but it's likely. And if that happens, again, that does benefit the existing players like Bharti in a big way. And so I think we can't say that the entire sector, particularly, let's say, Bharti or Idea, is out of the woods, or everything is going to be hunky-dory from here on. But yes, definitely the first signs of a positive move in the sector after a long time.
It's probably seasonal, as Somit Sarkar is telling me. Somehow telcos seem to have a good move in the month of October since inception of that index as well. Sudeep, having said that, the question mark that then probably comes to mind is, having moved up the way they have, will this be backed by earnings? Because quite frankly, the move in Bharti, and an Idea for that matter, Reliance notwithstanding, has happened without any indication of what the numbers could look like, not just in the quarter gone by, but over the next 2 or 3 quarters. We don't have commentary, we don't have a sense of the numbers. Do you think there could be earnings backing the moves in the two incumbents, which is Idea as well as Bharti?
Definitely not, Neeraj. I think market clearly understands that earnings are not going to be anything great, if at all. When you compare last year similar quarter with this year, it will be bad. It will show sharp decline, and it's happening for last few quarters already. So I think what market is looking at is the future. Market is not looking at the last quarter numbers, or even the next quarter numbers. I think they're looking into the future, and they're clearly reading that if price war is over, if the prices are going to stabilize in the market, benefit goes definitely to the largest player, which is Bharti.
Sudeep, are you suggesting out of the 3 stocks, Idea, Bharti as well as Reliance, if you have to bet on one, it would be Bharti?
Look, if it's only a telecom play we are looking at, yes, I will look at Bharti. But if I have to pick one stock out of the 3, I will still go for Reliance. But that is, I think, for reasons beyond telecom. Of course, telecom is one reason, but they have a large retail sitting inside, which is still not getting valued by the market. They have a very efficient petchem business. They have a good refining business. They have got rid of their unrelated, the global assets. So overall, if I have to pick one stock out of the 3, Reliance, if one telecom stock one has to pick at today's market, I think I'll go for Bharti.
Okay, I think we missed those numbers, but Graphite India numbers on your screen. Just look at that move and look at the numbers essentially. Revenue is okay, but the EBITDA margins have moved up substantially. EBITDA numbers by and large have moved up substantially, and that's leading to a substantial uptick in the bottom line as well. Revenues up 35% is nothing to scoff at, but EBITDA up 8x at 13 crores, margins at 28% versus 4.4%, and thereby the net profit numbers for Graphite India substantially higher. This deserves a mention simply because ever since that Jeffries note came out on HEG and Graphite India, the stocks have not seen sunset. I think the move in Graphite India for the last 1.5 odd months has been one which is spectacular. Now, Sudeep, I know we are changing courses quite dramatically, but this is numbers which are just coming in. I don't know how much of a handle you have on some of these base metal-led companies, so to say, but the numbers are staggering if you just heard what I mentioned about Graphite India.
Yeah, absolutely, Neeraj. I think, my view on metals have been consistent for some time. Globally, I think this sector is going through a completely, favorable tailwind. A lot of production facilities have been shut in the, European countries as well as US. Demand hasn't come down drastically the way it was expected. So I think the metal companies which are producing and which are efficient are going to have a good run for the next 1.5 years, at least till the new facilities or the facilities which have been shut down starts coming back on stream. So for next 1.5 year, I think the metal companies will do well, particularly these niche metal or the related companies.
Okay, so that's the word from Sudeep Bandyopadhyay, at least on some of these metal names. By the way, speaking of metals, look at Bhushan Steel. Look at almost any of the steel counters. I think Bhushan Steel is up. Electro Steel is up. There is Uttam Galva, which is up. There is some verdict with regards to SR, which is expected today. SR Steel, that is. I was speaking about it, and that could be one key reason why some of these small cap metal names are up. In addition to this talk of how a lot of companies are interested in buying off Bhushan Steel as well. So that is something that you need to watch out for. And I remember a conversation that we had this morning with Sandur Manganese, and they were talking about how this week there is going to be a Supreme Court verdict on the caps that are there for manganese mining. And if those caps are removed or they're reduced, then there could mean further uptick on the volumes front for Sandur Manganese and Moil and some of the others. So Sandur Manganese is up 10%. Moil is up about 15 odd percent, or 11% odd, excuse me. So there's some traction that we're seeing in some of these metal names as well. Sudeep, maybe Navneet has a couple of questions as well, but my one more question, one final question from my end is on real estate stocks, a sector which is, well, in a manner of speaking, hated. But if you look at what's really happening, RERA, supply deflationary, and probably small player deflationary as well. You'll probably see a lot of these small one building, two building developers going out of business simply because the cost of being in compliance with RERA is probably just too high. What happens to this listed real estate space? Look at almost any stock. I was looking at Colte Patil, Marathon NextGen, and some of the others. The last 1 month or 3 odd months, the stocks have actually given returns close to 70-80%.
Well, I think, Neeraj, you have absolutely correctly identified some of the recent changes which happened are definitely good for the long term of the real estate sector. RERA brings a credibility of a completely different magnitude for the real estate players, amongst the investors, global investors, domestic investors, as well as home buyers. So implementation of RERA will definitely change the industry going forward. Yes, there is a lot of short-term pain, but it's going to help. You talked about GST. Yes, absolutely right. The small two building builders will kind of willy-nilly move out of the market, and eventually that again will benefit the organized players, particularly the large listed ones. So yes, there is definitely a case for buying real estate companies, but you have to be very, very careful as to what you are buying. Regarding the 70-80% up move in about a month's time, I think these stocks have been beaten down, and all of them had been beaten down mercilessly. So there was a value play definitely, and some people are a little aggressive and they are trying to catch this value play. Having said that, I think there are still opportunities, decent opportunities in the real estate place. I can talk about the commercial real estate, and different cities in India are showing strong demand for commercial real estate, which should be a good sign for the economy going forward.
Yeah, so commercial and residential combined. I think Sudeep's point is well taken. It's commercial, which is probably doing the bulk of the move upward. Where would you think of, if at all, putting some money? I'm not getting into a stocks pick kind of a discussion out here, Sudeep, with you, but would it be non-Mumbai players? Would it be Mumbai-based but predominantly residential players, or would it be the ones with the stronger brand names, the likes of Godrej, Oberoi, etc.?
Well, I think, Neeraj, I will go for Bangalore and Bombay, because these are the two places where commercial real estate is really picked up. Bangalore commercial real estate, I believe, is rocking. Some of the Bangalore-based good players can be looked at, definitely. And the listed, there are some good players from Bangalore. As far as Mumbai is concerned, again, I will probably go back to the credible names like Godrej Properties as things stand today, because the listed universe is very, very limited.
Sudeep, the other space which has seen some sort of traction coming back, we've seen good numbers also from the likes of ACC as well as Ultratech. So the cement space is the one I'm talking about. Ultratech today has seen good gains of 3.5%. A lot of brokerages have upgraded the stock. In fact, Macquarie specifically has initiated its coverage on the cement space. Do you see any sort of revival coming back? Because demand was a little bit subdued in the past quarters, but the volume growth, that's the number which is standing out. Any stock in the cement space that you like?
Navneet, couple of things. I think traditionally the second quarter, as far as the volumes are concerned, has been weak because it's a monsoon season and the cement demand is always weak in monsoon. But having said that, I think still some of these companies you mentioned did come up with good numbers. I think one has to really look at cement very closely, and the markets also needs to be divided. I strongly believe that north and kind of central, eastern central India, that's the market where one should look at, and companies having facilities there, companies having operations there have the best chance of giving good returns to the investors over the short to medium term. So a JK Lakshmi cement will be a pick, a Heidelberg cement will be a pick as far as I am concerned.
Okay, so JK Lakshmi as well as Heidelberg are the two stocks from the cement space which Sudeep likes. Sudeep, stay on with us. We'll come back to you. In the meantime, Yash Upadhyay is joining us with his Fab Four stocks of the day. Yash, over to you.
Good afternoon, Navneet. So, like I said, telecom stocks were buzzing in trade today, with Idea Cellular in particular gaining close to 9% intraday, with volumes too coming in substantially higher at close to 7.5 times the 20-day average, after Reliance Jio, its competitor, hiked its 4G data tariff plans by as much as 15 to 20%, which is seen as a positive for the industry as a whole, reducing some of the pricing pressure. We have Ultratech Cement, which has gained the most in 3 months after CLSA hiked the target price on the stock, while also upgrading the stock to a buy from outperform to 4,900 from 4,700, indicating an upside potential of close to 21.5% from yesterday's close. We have BHEL, which is up as much as 2.5%, but the stock gained more than 5% intraday on the back of the company coming out with an announcement saying that it has bagged an order worth 20,400 crores from Telangana government for its Yadari thermal power project. And lastly, we have GVK Power. The stock is locked in a 5% upper circuit on the back of news that it is set to win the mega 16,000 crore Navi Mumbai airport project.
Well, thanks a lot. I'll tell you, more than GVK, if there are a set of players who are waiting for this airport to come about, it's the Navi Mumbai-based real estate names. Sudeep Bandyopadhyay, before we thank you, just a word on this theme that certainly seems to be there, which is look for not broken, but fractured balance sheets, companies under distress which may be coming out, and companies which are under distress not because of management mistakes, but because of the cycle not being in their favor. I think real estate was probably a part of that. Maybe some of the steel names, maybe companies like GVK are part of that. Any pocket out there, any theme where you believe coming out of distress and you're comfortable playing that?
Well, Neeraj, I'm a little cautious on this part. You know, I see these Bhushan Steels and Electro Steels going up, like crazy, and I'm getting a little scared. Believe me, what I believe is that the plant which Bhushan Steel has or Electro Steel has definitely a lot of value, and that's why they're attracting, pretty much all the large players as bidders. But having said that, I'm not sure how much the equity shareholders of these companies are going to get after the, the entire thing is settled. So one has to be very, very cautious as far as these, particularly these auction or, these kind of assets. As far as the other, distressed sectors or the sectors which are in trouble, you mentioned GVK, GMR and some of these names. I think, still they have a long way to go. I will be still very, very cautious. Yes, they at some stage may give investors good return if they persist with the good work they're trying to do. But I think that's still some distance out. And I will rather, avoid these sectors. If I have to really go and buy some of these stressed sectors, I will probably look at some of these, private sector, small banks. There are a lot of these banks which have been beaten down because of what's happening in the entire sector, and there may be value sitting out there. So a South Indian bank may be a good buy, maybe a City Union Bank is a good buy. So I think these are the things which I look at.
All right, Sudeep, we'll let you go on that note. Thanks a lot for joining us today and giving us your views on different sectors. Well, on that note, let's also listen into some of our experts on what they had to say on the stocks that they are betting on for Samvat 2074.
We have a stock under our coverage called DCM Shriram. So it's doing very well because of sugar doing well, because of chemicals doing well. So chlorovinyl prices have again come up and the margins have gone up by 4 to 5%. So I think that another 1 year looks good for chlorovinyl, for sugar. So DCM Shriram, even at from the current level, can see a good 30-35% increase over the next 1 year. Jindal Stainless Hisar, which has been under our coverage, though the stock market cap has gone up from 1,000 crores from when we recommended to 5,000 crores now. But still, the kind of EBITDA generation and the cash generation that they have, the capacity utilization are now touching 90%, and with little bit of little bit of balance of part, they can increase capacities by another 10%. Specialty steel is increasing there as part of the total portfolio, and they have other divisions which are doing very well. So Jindal Stainless, even from the current levels, with the kind of EBITDA generation they have, they can give you another 30-40% return over the next 1 year. And in the small cap space also, we've identified a company called Cords Cable. So it's into CNI, control and instrumentation cables, specialty cables. So they have repeat orders from Metro. They have huge opportunity from desulfurization of power plants, from OMCs, from dedicated freight corridor, railways, and they have a good order book. So I think that stock can be a multi-bagger over the next couple of years. So being just a 135 crore market cap with a 300-400 crore sales, they have a huge potential with sales growing at 30-40%, and even there's a huge valuation gap even at the current sales levels.
The best stock to buy on a Morat day for a Diwali, at least for a North Indian, is the gambling stock we have, which is Delta Corp, right? You can't go wrong in that. We love gambling, and that's the only legal place where you can gamble in this country. So I think if there's one stock I would pick up, my people would, I guess, buy for me on this Diwali would be that stock.
Today's Starlight Technology, which is involved in this, they are getting the maximum advantage because a lot of order position is lined up, and because they are producing raw material also, right, fiber, that's why they are in a better position.
All right, moving ahead, buy on dip strategy has worked really well in liquidity-driven markets, says Andrew Holland, CEO at Avendus Capital. In a conversation with Bloomberg Quint earlier today, he further says that US fiscal tightening could only result in a short-term kind of correction for markets. Listen in.
We're sitting in, as we have been now for some time, liquidity-driven markets, not just in India but globally. And you try and work out and think about what will burst that bubble. And in the past, nothing has really kind of burst it. It's been temporary kind of falls, and the buy and dip strategy has worked very well. But as we come towards a tightening in the US, not just through interest rates, but also through the balance sheet tightening, then I just wonder, how the bond markets will react to that, if there could be any kind of, turmoil in the bond markets, which we haven't seen. If that was the case, then obviously, you'd see a lot of money which is going to come into emerging markets, bond markets, being quickly taken away, and that exacerbates kind of currency depreciation, and that could throw a few wobbles for equity markets as well. So that's really the biggest concern in the short term. But longer term, we stick to our view that both globally and locally, we remain very positive about the kind of mid to longer term. But the shorter term, liquidity-driven markets do throw up nasty surprises, and whilst we haven't seen any yet, as markets keep kind of climbing higher, the risk becomes a lot more kind of severe on the downside.
Andrew, I'm jumping straight to some of the newsmakers before we talk about the broad macro as well. I have a couple of questions there. But Telecom, I mean, what's happening? Just when we thought that the price wars could get a bit ugly, Reliance Jio ups the tariffs. It probably gives, at least the market believes, the incumbents some leeway to increase prices as well. But more importantly, this whole consolidation now leading to a 3-player market, and people believing that, hey, could this be a start of pricing power returning back to a very small player participated industry? What are your thoughts on telcos?
Well, I think you've actually summarised it very well in terms of where the market's kind of now thinking more positively. Our view was that Reliance probably had another opportunity to squeeze a little bit harder, but they decided that that's not what they want to do. So, you're right, it gives a little bit of pricing power, it gives a little bit of kind of lull, but I wouldn't be surprised if Reliance don't come back and just tweak their aggressiveness again, just to take some more market share. So, whilst we become less negative on the telecom sector because it has been going through its pain for over 3 years now. I think the initial part of the rally was on accounting differences between, say, a Bharti and a Reliance, and if you kind of put the same accounting norms there, which I'm not sure I would be so fundamentally kind of approving of, but it's worked for the sector. The sector's been under-owned, unloved, and you've seen these bounce back. But it's going to take some time for this consolidation to work through. And I still think there's, I wouldn't be chasing at these levels. I think it's had a reasonable run, and I think there's probably better sectors to look where you can see the earnings visibility a lot higher without some very aggressive player who's trying to get his market share.
Right, let's take a look at the markets which are back in the green, and some sort of recovery has been seen for the PSU banking index, which is sitting with gains of over 1%. In fact, majority, or rather all the constituents there, are trading in the green, with top gainers being Bank of Baroda, Indian Bank, and your heavyweight State Bank of India is also seeing some sort of gains in today's session. Well, let's just get a technical check on that note. Hemant Kapadia of KR Choksey Securities joins us on the show now. He's right here with us in the studio. Hi Hemant, thanks a lot for coming by. Just a word on the Nifty as well as Bank Nifty. Considering it is the expiry week, last 2-3 sessions have been pretty volatile. We've seen the VIX surging to 12.5 as well. What should one do at these levels?
Hi Navneet, good afternoon, thank you for having me. See, to be completely honest, I think 2-3 days before the expiry, the chart stopped working from a technical point of view. You have rollovers coming in, you don't know whether they're short rollovers, long rollovers, what these guys are doing. So frankly speaking, from pure technicals, I go blind a few trading sessions back. But one thing, I think there's a significantly large, I know this is far away, but significantly large put open interest at 10,000 Navneet. So one gets the feeling that we are protected as far as 10,000 is concerned for the expiry. Having said that, if one looks at the Bank Nifty Navneet, we're oversold. Downside appears limited. I think if we don't break 23,900, chances are that we will be giving a 150 or a 250 point recovery from here by Thursday. So the first clear option would be to stay away. And if you want to make it safe, I think sell the 10,000 put options. I don't think that looks like breaking in the next 3 trading sessions. And if you want to get a bit aggressive without taking a risk, I think the Bank Nifty Thursday option, Navneet, 24,200 can be bought. It's a slightly higher strategy, but minus the risk of futures. So I think that is one way where you can play for the bounce without getting stuck too much from a stop loss point of view.
All right, so that's the view coming on Nifty as well as Bank Nifty. Let's also address those important earnings flashing there on your screen. Hindustan Zinc has just reported its earnings. The net profit for the quarter has come in at about 2545 crore versus 1902, which was there in the corresponding quarter. Poor was throwing a profit figure of almost 2293, so it has been above estimate. That's the bottom line. The total income for the quarter is at about almost 5800 crore. And we were expecting expecting almost 55. So the top line as well as the bottom line so far looks like above what our poll was throwing about. But important to see how the EBITDA margins stack up. We were looking the margins at about 54%, Neeraj, which was supposed to contract on year-on-year basis.
It's marginally off what we were working with, Navneet. But I think the PAT number, we were expecting 5,505 crores. So the revenue numbers are slightly off, but the margin, but I would presume that either there is an extraordinary or that the margin number is better, because the bottom line number versus our estimates of 2293 has actually come in at 2,500 crores, 2,545. So the margin number is, the PAT number is much better, and which is why I think the EBITDA number and the margin number becomes very, very crucial. But Dharmesh Kant, independent market expert, joins us right now on the show. Dharmesh, in the thick of earnings season, we'll talk about the markets as well. But just a quick word on Hindustan Zinc as well. You know, the last couple of years, this is probably that one steadfastly strong metal name. Of course, the last 2 years, almost everything metal has done well. But this one has reported good numbers as well. What's the thought on the numbers?
Yeah, good afternoon. See, as far as metals are concerned in a space, the prices have moved up quite significantly, especially of zinc metal in the international market as well. So I think it's the price realization which is doing the work. At the same time, you know, zinc is being used now largely for all industrial as well as domestic and commercial purposes. So the volume uptake is also there. As far as I have not seen the numbers in detail as of now. What I gathered from you guys when you were speaking about the numbers look quite, you know, above estimates, and I think the metals will continue to see buoyancy going forward. Hindustan Zinc, in particular, all the metal space along with Hindalco remains the top pick from the long-term buying perspective. So metal as a space will remain volatile because of the currency fluctuations which you have in play, but at the same time the volume growth will be definitely there. So I think from long-term perspective, one should be buying into Hindustan Zinc and Hindalco even from current price levels, around 30-40% kind of an upside I see down 1 year line.
Well, Hindalco currently is trading in the red. Let me just quickly get a technical view on Hindustan Zinc on the chart. Simeon, do you see anything here?
We've had a brilliant run-up, Navneet, as far as Hindustan Zinc is concerned. And like Neeraj said, I think everything metal has gone up. Having said that, we are walking into a roadblock. The roadblock comes in around 330, 333, Navneet. We have never ever closed or sustained above this level. And this is a weekly as well as a monthly level. So we are walking into a very strong level. I don't expect this to be taken out at the first attempt. It needs to work a bit, consolidate some more, especially keeping in mind that we've run up from 230 to the current levels. So close about 330, 333, a small 3-point range, Navneet, should open the doors for a further upside to 350 plus. But will this happen without a correction? Even on good numbers, I have my doubts.
Okay. I'm told the EBITDA margin numbers are at 57%, so that's a good one as well. Anyways, let's move on. That's, of course, Hindustan Zinc, but lots more moving around in the markets. We've been talking about how some of the active pockets have been in the telecom space. Jay Thakkar, Assistant Vice President for Equity Research at Anand Rathi, is also with us. Jay, let's start off with your stock recommendations for this afternoon. What is it that you'll be giving out?
Hi, good afternoon. Well, I've got few stocks as far as the cash segment are concerned. You know, one would be Radico Khaitan. I think, you know, this stock has been showing good traction on the upside. I think the way the momentum has clearly reversed from sell to buy with increasing volumes on the weekly charts, I'm saying. So daily has been quite positive, but on the weekly charts also, this reversing from sell to buy clearly indicates that, you know, there is a good amount of upside left in this stock. I am expecting around 285 to 90 on the upside. As far as the medium term trend is concerned, on the lower side, we believe that 205 to 206 are very good support for this stock. One would be this. Second is Shriram Transport Finance among the futures segment. Now, I think the way the stock has taken off its previous swing high on the weekly charts with the buy crossover, and as well as the stock, the prior move was clearly an impulse move, that is a 5-wave rising structure, post which we have seen the stock correcting by 50 to 61%, and thereafter taking off these high with this increase in volumes clearly indicates the next impulse move on the upside has begun. So Neeraj, I believe that, you know, Shriram Transfin clearly is all set to go towards the levels of around say 1300, 1315 in the medium term. However, for the short term traders, I would say for the F&O traders, the minimum target comes to 1175. On the lower side, 1095 will be the stop loss. One more stock among the cash segment I'd like to recommend would be Suven Life Sciences. I think Suven Life Sciences in this dip or in this correction should be utilized as a buying opportunity, because this stock has clearly provided a good breakout from a base triangular pattern. So I think on the lower side, 202, 203 would be a very good support for the short to medium term, whereas the target on the upside comes to around 240.
Himin, what would your top trading strategies be at the moment?
Navneet, I think one stock that I like is Indocount. Indocount is oversold. We've seen positive divergence. Some of the mechanical indicators on the weekly charts are turning positive. So I think Indocount is one which stands out as a buy. One can buy with a 7 rupee stop loss and a 15 rupee target. The other stock which is also setting the stage for a turnaround, Navneet, is Apollo Hospitals. We are at around 1059. Once again, we've been down, we've consolidated, now we are possibly turning. Indicators have turned positive on the weekly chart. Maybe there could be a small daily consolidation left, but Apollo Hospitals around 1060, stop loss of 1040, target of 1100. Both are counter buys, both are reversing downtrends now.
Okay, a space which has done extremely well is this whole real estate pocket. Kolte Patil is now up 12%. Suntec Realty is up 16.5%. I don't know about some of the others, but these two certainly stand out for me in the session today. Over the course of the last 1 month, of course, a bunch of others too have done well. Anything that stands out for you, Himin, out of this? Suntec Realty clearly the big mover today, but over the last 1 month, a bunch of these names have done well.
I think we don't have too much of data in either, Neeraj, but whatever data is there seems to suggest that we still have decent headroom left. Suntec is a personal favorite. Stock looks good, has done well. I have a feeling that this is not the end. We have a lot more upside left. Same with Kolte Patil. I'd say we'd look at 25-30 appreciation from 25-30% appreciation in both over the next 12 months. Both look good. If you look at the BSE Realty Index, Neeraj, I think that has turned after a long time. Even the mainline stocks which haven't done that well, something like a DLF, Neeraj, I think could give you good, if not very, very good returns over the next year or so.
Well, Suntec, they've got a board meeting on this Wednesday to consider options with regard to fundraising. It could be a QIP as well. So ahead of that, we've seen that big move coming about. And also, I guess there were some large trades where 1.6% equity exchanged hands. Probably that could be one of the reasons. But besides that, the entire sector has been doing well. As Himin was mentioning, among the Nifty Realty, you've got constituents like Soba, Godrej Properties, DLF. All these stocks have seen substantial gains. But in terms of few stocks which are not doing well, let me quickly get a technical view on PC Jewelers. That stock's down almost 4%. Jay, on the charts, is there any trend that you're spotting there?
Well, Navneet, I think PC Jewelers has seen a decent move, and I think a correction like this cannot be ruled out. But at the same time, I would also like to say that we're almost seeing the end of the zigzag corrective pattern that's been forming on PC Jewelers. I know there is a risk of a double top here too, because 395 is the top which was made earlier in August, and this time as well we have seen the top being formed at 395 only. But then we can also say that the stock had provided a very decent breakout from a downward sloping channel. Hence I believe that on the lower side it has got a very good support around the levels of 316 as far as the medium term trend is concerned. However, for the short term, I would say Navneet, that this stock has a good support at the levels of around 344, so it's quite nearby to its support. So I would say that not to sell at these levels. Yes, of course, if it breaks 344, then it does has a risk of inching towards this previous swing lows of 316, which would be quite painful for the futures segment traders. So 346 is the ideal level to watch out for, and that should be 344 should be the stop loss, I would say, rather. And on the upside, I would say that it has got a resistance at 370. The day it crosses 370, I think it would again start its upward journey. So that's the range for PC Jewelers, 344 to 370. Whichever way it breaks out will eventually lead the stock either to the higher end of the range, that is 395, or the lower end of the range, that is 316.
Okay, but the big boy is pulling the index higher. We are about 1/3% higher, and Reliance Industries up 3.5% is that big contributor to the index move today. It's only the biggest listed entity has only gotten bigger, and today Reliance Industries becomes the first Indian company to hit a market cap of 6 lakh crore. Sumit Sarkar has some interesting data points and charts on the big yardsticks for the oil and gas space then and now, and how the telecom giant has crossed some of these. Sumit, fill us in.
Yeah, see, the company took now around 3 months to reach the 6 lakh crore market cap from 5 lakh. But this is not the shortest time period. Now let's see the other landmarks that the company has. So it touched 1 lakh crore in August 2005, then 2 lakh crore in April 2007. Then it took 5 months to reach 3 lakh, and then just 1 month to reach 4 lakh. So it took around nearly 1 month to reach from 3 lakh to 4 lakh crore market cap, and then it took nearly 10 years to reach up to 5 lakh crore market cap company, and then now it is 6 lakh in just another 3 months. So what are the reasons that led to this? So if you see, the first reason would be the completion of capex cycle. Now the company is on a verge of completing its capital expenditure cycle, but the benefits of this will be impacting its financials from the third quarter, and still it hasn't impacted. Second, the reason is rising GRM. Now the Singapore GRM, that is the Asian benchmark, has been rising, which has worked in favor of the company. And in this period, the GRM touched around $11 per barrel mark, which was the highest in the last 2 years. The third reason could be the bonus issue. Now in this period, the company also declared bonus shares to its shareholders in its last AGM that was held in around September 2017. And last not the least, that is Reliance Jio. Now this is the major factor which has fueled the rally in Reliance Industries stock. The company came out with its financials and it reported an EBIT positive number in just 3 months of commercialization. Now recently the Reliance Jio also revised its tariff plans, which suggest that the ARPUs would be going ahead, the ARPUs would be more higher for the company. And now here's an interesting chart, interesting fact which shows how Reliance Jio is more important to Reliance Industries. Now on 1st September 2016, they announced the plans of starting Reliance Jio, and since then Reliance Industries market cap has gained around 2,60,000 crore, which is more than the total investment done in Reliance Jio. In Reliance Jio, they have invested close to 2,50,000 crore so far. So this actually shows.
But what Reliance Jio has done while disrupted the telco space, Sumit, if the stock prices are to be believed, it's been anything but disruptive. I mean, the market caps of both Idea and Bharti in particular have really shot up.
Yeah, they did, but now they're seeing a rally because of the revision that Reliance Jio came up. And now if you see, in the revision, they have lowered the validity of their most popular plans and they have introduced a new plan. So 399 plan, they have lowered the validity to 70 days from 84 days, which led to an effective rise in ARPU of 20%. In the 509 plan, they have reduced the validity to 49 days from 56 days, which led to an effective rise in ARPU of 14%. And then they have introduced this new plan of 459, which has a validity of 84 days. Now this is the prepaid. Now if you see the postpaid plans, they have reduced the validity to 30 days from 60 days, which means an effective rise in average revenue per user of 100%. Now how does the other telecom companies benefit from this? There's a pricing discipline that comes in the sector, which is very important for the sector because it has seen a very aggressive pricing in the last few quarters. So the irrational pricing goes away, revenues gets more stabilized now, and the incumbents who are charging lower prices, then Reliance Jio can now take a hike in the prices because Reliance Jio has done it. And if you see, Airtel and Idea had seen their average revenue per user falling in the last 3 to 4 quarters. But now going forward, they can expect this to stabilize. In fact, ICICI Securities is expecting that the overall average revenue per user would bottom out in Q2, and from Q3 there could be a reversal in this trend.
It's clearly moving up. Moving the needle on a bunch of these incumbent names as well. Sumit, I think your point is well taken. Thanks a lot for joining us and giving us that perspective. Dharmesh, it's a two-part question. Sumit did a two-part link. One is Reliance and the surge that we've seen. Is it a good enough purchase? More importantly, whether the other telcos form a part of or should form a part of an investor's must-have or a must-buy list.
Yeah, see, as far as the first part of your question is concerned, Reliance is definitely a good purchase even at current price levels, because if you work on the EPS numbers and the way they have been hiking their tariffs on the Reliance Jio front, I am very sure that by this end of this fiscal year, they will be into profitable. The PAT profitability will be there for Reliance Jio business itself. So retail will take its own time, but as far as refining and petchem is concerned, they are doing pretty well. And now this Jio, which is now more than 50% of the capital employed, it starts delivering to the numbers. My own sense is that by FY 2020, you will have an EPS of 100 for Reliance Industries. So with an EPS of 100, so it's still available less than 10 times PE multiple, and where you are having a solid growth trajectory of EPS going forward. So Reliance definitely is a good buy because of the various verticals in which it operates, and all are now turning profitable. The recent news about gas production being hiked, or maybe they would do so. So that again is a big positive for Reliance Industries. But as far as telecommunication space is concerned, whether one should be buying into Bharti and Idea, so the answer from my point is an absolute no. Because what Reliance is doing is eating into the market share of other telecom players. So now, initially it was to gain the subscriber base, which they have been doing exceedingly well. The run rate has been very high, and now it's like stabilizing the tariff platform. So once this is done, the same Reliance Jio customer won't be going back to the Bharti or Idea. So they would continue to stick to Reliance, because Reliance has this habit of giving freebies time and again, and keeping customers induced to itself. So that would be the scenario. With this ARPU levels, I don't think Bharti, the type of PE multiple at which it is trading, or Idea merits a buy. So for me, Bharti and Idea still remains, if you have invested and you are lucky enough, take your profits, go away from it. No new investment case is there. But Reliance, definitely yes. I won't be surprised like if I discount it for FY 2020 numbers, 2700, 1500, 1400 should be the stock price of Reliance in 1 year time frame.
Well, it's been a one-way move for Bharti Airtel as well as Idea in the last 1 month, and who would have thought, because the consensus view on the street until few months back was that stay away from these telecom stocks. Let's also talk about Pharma. The Nifty Pharma index today is your top sectoral loser. We've seen some sort of weakness coming in for stocks like Biocon, Lupin, Cipla, you name it, and majority of these stocks have seen some sort of weakness. Dharmesh, what's the view here? We've seen Pharma stocks recovering from their all-time low levels. Almost 10 to 12% recovery has been seen, but not a very convincing move. Do you think the sector has still not bottomed out?
Yeah, definitely yes, Navneet. Pharma we have discussed time and again, and I don't think it's a fundamental long-term buy in the pharma space, because fundamentally if you look at the pharma space, 3-4 factors which drive a company's earnings are not there. First is the price factor. So you will be having price pressure on the blended realization front of all the pharma companies, primarily because the prices are going to go down. Secondly, you have stiff competition coming up. More and more players will compete for the same generic medicines. And third, you have a channel consolidation happening in the US, so that discounts will be more steeper for the pharma companies to offer to the channel partners because of the consolidation being happening there. So again, that will lead to a margin squeeze. And US FDA, we all know, sometimes they give 3-4 approvals, then again observations is being issued, and once a 483 observation is being issued, it takes 1 year, 4-5 observation again to get the plant back to the production floor. So these all issues will keep on playing pharma, and currency again is not a factor which is conducive for pharma space, because if the rupee is going to appreciate from here on, that again they will deprive the pharma companies of their profitability. So that's a cost which all export companies have to bear with. So my personal preference is stay away from pharma space. Trading bounces are there, and which is the case as of now is happening out there. Still, if one has to stick a neck out, if one pharma stock I have to pick, that will be Aurobindo Pharma, because that's the only stock or the company which I see having some merit for 20-35% kind of a solid growth coming into play in the stock price, because valuations are at 14-15 times 1 year forward multiple. Actavis is doing well in Europe, and their NDA filings of the high margin drugs, they have been getting consistent approval from US FDA. All the plants are clear, so that's the only stock which I can think of buying. Otherwise, pharma should be an avoid.
By the way, look at the small cap end of the market. GMDC, for example, is doing rather well for itself in the session today. Good moves there. for GMDC in the session today, up about 12%. I was trying to look at stocks which have hit new highs, and Rain Industries forms a part of that list, up about 2.5%, so good going there. There's also Radico Khaitan, which has moved up. Coromandel International amongst stocks which have moved up. And something which I thought formed a consensus stock recommendation on the channel around the Diwali session was Delta Corp. Almost everybody, or at least 3 out of the 5 or 6 names which came on the channel, spoke about the gambling business. And even if they didn't speak about the names, I think there's only one name that you can bet on when it comes to gambling in the listed space in India, and that is Delta Corp. So that found some consensus amongst experts, and that stock has had a good run to the last few sessions. 233, another 2.5%. This means that the stock has touched new 52-week highs. I would presume these would be life highs for Delta Corp. I don't remember seeing the stock at these levels. So good going really for Delta Corp over the last 12 months, yes, but I think from a stock perspective, these are probably life highs for Delta Corp in the session today. But Navneet, very interested in pointing out our morning feature, which is Bloomberg Edge. In the morning, Jayesh Khilnani had spoken about Reliance Infrastructure. The terminal was throwing up some very interesting insights on Reliance Infra. And I just want to get Jayesh in because the stock is up about 3.5%. Jayesh had spoken about what the terminal was trying to indicate in the morning about Reliance Infra. Let's try and revisit that point. Now, Jayesh, what was the base argument for the terminal? What was the chart or the indicator that was being used?
So Neeraj, we were working with the stochastic indicator, which works really well with Reliance Infra as per the backtesting results thrown up by the Bloomberg terminal. Now in the morning, what we had pointed out is that there was an early buy signal that had come in for Reliance Infrastructure based on stochastics indicator. Now let's have a look at what the stochastic indicator is. Well, it helps you to identify when the price move is extended, and it also helps you to measure where the current price is in relation to the recent high or the low of the recent time that you have. Now there's few conditions that you have to keep in mind for stochastic indicator. Anything that is above 80 is called as overbought, and oversold is below 80. And a crossover between the two lines indicates a buy or a sell signal depending on the direction of the crossover. Now let's revisit the chart of Reliance Infra that we had. So that is where the crossover had happened. So on Muhurat day, we had a crossover between the blue line and the white line that was there. Now, that was an early buy signal. Where the confirmation has really come in, if you look at it right now, both these lines have crossed above the green line, which is the key level to watch out for, which means that the early buy indication which was there in the morning has now transformed and become a confirmed buy signal as per the stochastic indicator.
And I think the efficacy of this stochastic in Reliance Infra's case is pretty high, Jayesh.
Yes, Neeraj. So, we were working in the morning with a percentage number of about 32%. Now, I'll have to revisit and see what kind of numbers the terminal is right now throwing up. I'm sure that it will be more than that.
Okay. So, 32% efficacy for an indicator that the Bloomberg terminal threw for Reliance Infrastructure as per the stochastics indicated a buy, and the stock, well, has obliged up about 3.5% in the session today. For somebody who went long him in the morning looking at our terminal insight, what would you advise now?
I think it looks like a hold because one level is 468 and the second level is 472, Neeraj. I have a feeling that if it takes out 472, which seems like a possibility, I think we are heading towards 480 in the next 48 hours, 2 trading sessions. So either to protect the investment, keep a stop loss at trailing stop at maybe 461, but I have a feeling that it has headroom, and I think we should do well in the next day or two.
Okay, so one can look to hold on Reliance Infra in case they have taken any position on the long side. Let me just address the other pocket which has seen gains. Let's just pull up Dhampur Sugar Mills. The entire sugar pack is buzzing today. Dhampur Sugar has seen gains of almost 7.5%. The stock's currently trading at a day's high. Not only that, actually, you've got Sakti Sugars, that's up 3.5%. Sri Renuka has also seen good gains in today's trading session, and Balrampur Chini is up 2%. Dhampur specialty, Bajaj Hindustan, which is once again a sugar company. Well, the entire pack has seen some sort of gains in just last 15 to 20 minutes. We don't know if there was any specific news, but let me quickly get a view on the sugar sector. Dharmesh, is there anything that you're spotting in this space or any stock that you like?
See, there is nothing sugary about sugar stocks, you know. It's just that you have these pop-ups coming in and on the sugar, on the news flow basis. But as far as, you know, fundamentals are concerned, on a long-term basis, you have never seen any, you know, wealth being created on the sugar stocks. So, see, the industry is growing at the rate of 1.5 to 2%. The sugar consumption space is going at that. There are hardly any margins there on the EBIT front or on the PAT front. So, fundamentally, how can one justify whether you should be long on sugar stocks for, you know, a reasonable period of time? Just because the stock price correction happens because of the news flow surrounding it on the government policies and surrounding them. So that's the trading pops which you see into play. So for me, sugar is a total no-no, both health-wise as well as investment perspective-wise. But for trading plays, one can play on technical parameters with stop losses in place. That is all which is there in sugar stock. I mean, 10-15 years track record, if you see, this is what has been the story.
No, I just so agree with Dharmesh. And we got a bunch of questions that had come in this morning about asking about Balrampur Chini and a few other stocks. Look at the last 6 months, and these stocks have done precious little. So you could probably have an odd EID parry or some of the others doing well. But the large ones, Bajaj, Balrampur, Renuka, etc., the last 6 months have virtually given zero returns. So maybe it might just be a better idea to look at some other pockets which are more active as opposed to sugar, which is probably not so. Stocks, and I want Jay Thakkar's opinion on this before we move on to the global markets. Couple of stocks which I thought we should mark, and large names which have moved up in the last few minutes. I just want to see if Ambuja has indeed done that. If I'm not wrong, the last 45 minutes of trade, or last 5 minutes of trade, excuse me, Ambuja Cement has just started showing a bit of an uptick. So that is one. I thought there was some strength in PTC India Financial Services, so a bit of a surge that has happened in the last few minutes of trade in PTC India Financial Services. And yeah, I mean, I take on board Navneet's point. A bunch of these sugar names have started to move up. This is PTC India, but PTC India Financial Services is the stock that I'm talking about, which has inched up even further. So good going there. And yeah, some of the sugar names seem to have done rather okay. Jeb, maybe cement, large cap cement, and Ambuja for that matter, or Ultratech. How does it look on the charts?
Well, you know, I would say, Neeraj, that Ambuja is absolutely in an uptrend. I would say that, you know, it had just gone sideways, you know, within a range. I would say on the upside, maybe around 284, 85 to lower end on 265 to 70. But overall, if you check the entire, you know, on the weekly charts, the stock is definitely in an uptrend. I would say it's clearly trading in an upward sloping channel. The upper end of that, of the same, comes to around 300, 305. So I think anyone is holding Ambuja Cement can continue to do so. On the lower side, placing a stop loss, a closing basis at you know, below 270 and targeting around 300 to 305 on the upside. As far as Ultratech Cement is concerned, you know, this stock too has been performing quite well. And Neeraj, you know, this is one stock which we too had recommended to our clients. And I would say as a disclaimer that, you know, this stock we had recommended not only for the short term but as well as for the medium term. The stock clearly had fallen in a downward sloping channel. You can also say, you know, in a wedge pattern, and the stock has clearly moved above the, you know, resistance on the upside. A breakout above the levels of say 4,400 would definitely confirm the breakout on the upside from this wedge pattern. Thereafter, the stock can rally beyond 5,000 levels as well for the medium term. I would say this is one of the stock where the risk reward is absolutely in you know, favor of the bulls. But apart from this, as I said, you know, Ambuja also looks quite good, so one can hold that as well. Okay, Dharmesh, before we thank you, by the way, look at Kolte Patil. I just can't get over mid-sized real estate names today. Navneet, I'm sounding like a broken record, I know, but look at Kolte Patil. 18.5% now. That's 264 on the counter and ticking. By the way, Sobha is up about 7-8% too. So it's not just Kolte and Suntech. Yeah, Purvankara. That one is at a good move too. Mid-cap real estate or small-cap real estate is just having such a fabulous move. Really good going. I must also mention one Murat trading idea.
not a trading idea, really an investment idea. Jindal Stainless Hisar, which Neeraj Diwan from Quantum recommended, is up about 4.5% today. So that seems to be doing okay for itself. Dharmesh, before we thank you, what is it that you would be bullish on? We've kind of thrown a few sectors at you. We haven't asked you about what is it that you like.
Yeah. See, I am very bullish on the entire BFSI segment because my own sense is that economy is on the mend, and BFSI is the first sector which is going to benefit from whatever economic growth we see. So that space will remain, in the budget. At the same time, infra and construction is also looking pretty well. So the likes of NBCC, if one stock I have to pick for 1 year forward, which I see a doubler from even the current price level, that is the NBCC stock. The company is clean, the balance sheet is totally clean, there is no debt on the company, high ROE, ROC kind of a business, and the type of election run-up will be there in 2019. So anticipating that, you will have large chunks of order flows coming in for the infra and construction space, particularly in the North India where this company is particularly active. So that would be one stock. Apart from that, there are a couple of stocks which I have discussed earlier on your channels. That is, one is BLS International, very strong set of earnings trajectory it is following. Last year it reported 50 crores out of profit. This year I am expecting 120 odd crores kind of a profit, and going forward FY19 200 odd crores. So even if you discount at 25, 26 kind of a PE multiple, FY19 360, 380 is the stock price which is likely to be. Kaveri Seeds from the agri theme. Things are now working fine for Kaveri Seeds. There won't be any inventory write-offs, which was earlier the case. Seed composition also they have changed to vegetable, which are high margin seeds variety of the hybrid types. So that is one space one you can look at. And PTC India Financials, I have recommended this earlier also on your channel. So this is also a very good renewable energy segment. It caters to 63% of the loan book is there. And now with the focus of the government on this segment, we expect a very strong growth trajectory for PTC India Financial Services. NPA levels seems to be arrested now. If this quarter again there is no growth in the gross NPA and net NPA, then this is a very good buy. It's available at 0.8 times price to book current valuation multiple. Even if you discount at FY19, 1.1 time price to book, so 66, 67 is the stock price which is likely to be there. So quite a big kind of an upside. So these are the few ideas where I have been working on and recommending them to my clients for a long period kind of a holding.
All right, Dharmesh, thanks a lot for joining us today and giving us your views on the markets. Well, clearly, markets are off days low, and there are a couple of stocks in the broader market which have seen good gains. Neeraj has already spoken about the realty stocks, or rather the entire infra and the real estate space. But look at stocks like Gujarat Mineral. That stock's up almost 11%. That's GMDC as we call it. KPR Mill is the other counter, which has seen gains of almost 10%. That's GMDC there on your screen, up 11%. 8K Miles once again is up almost 8%, and one stock specifically I want to highlight is Petronet LNG. This is the counter which has been taking baby steps in last 1 month, and if one has to see the returns on Petronet LNG in the last 1 month, I guess it's between 20 to 22%. Himeen, on the charts, would you recommend taking any fresh longs here? What are the levels on the upside that you would be watching out for?
Frankly speaking, Navneet, there aren't very many levels left as far as Petronet LNG is concerned. We are at all-time high, Navneet, so not much to go on. Having said that, we have been a mature uptrend since mid-2013 from 50. We continue to post higher tops, higher bottoms. We are in a comfortable move. If I were to keep the nearest stop loss, that comes in at Navneet, that comes in at around 249. Fresh, I'm not sure. There's nothing wrong with the stock. It's just that it's run up a bit much. But if you have a position, hold on. Daily, weekly, monthly, all time frames, we are in an uptrend. There aren't any signs of negative divergences yet. Mild overbought situation, fine, but nothing to be worried. So I'd have a hold. Fresh buy, I am not sure.
Okay, let's also bring in Rajat Sharma, CEO of Sana Securities, into this conversation. Hi Rajat, good afternoon. Thanks a lot for joining us. What are you doing in this kind of market? It's the first trading day of the new Samvat, and markets have been pretty volatile. What's your take, and what have you made of the earnings so far?
Yeah, good afternoon. No, so markets have been volatile, and earnings really have been a mixed bag right now. Markets have also been expensive for a very long time. But my view has been for the longest time that these markets will remain expensive for a fairly long time, and unlike all previous corrections, you'll see that for the next 2-3 years there could be 5-10% market-wide correction here or there, and the markets would just keep coming back. So these, if somebody is not investing, hoping that markets would become really cheap and valuations will cool off, and that's when I'll get in, then he may actually have to hold on for many years before he really gets into the market, because it's been my view that every market fall is different. So it's this time when it happens, it won't be like 2008 where markets fell 50%. You'll see these 5-7% corrections from time to time, and markets will keep coming back because the money that's come into the markets is likely to stay. It's sustained inflow from SIPs and funds. There is risk that if markets fall a lot, that money will go back. But I think financial assets as security class are here to stay in India. So in this environment, we are recommending that wherever you see value or wherever you see growth, you should invest. Don't hold back. Don't sit on a lot of. In fact, I think the bigger risk right now is to invest in a lot of these fixed income kind of schemes where more money has got invested than actually is needed. So more defaults could happen there. So I think stocks at this point, even at these valuations, if you find them right, if you can pick the right ones, are actually a safer asset class to be in.
Okay, so that's a positive view coming in on the markets. Let's just pull up Shree Cement. That stock's at day's high. It's up almost 3%. Remember, Macquarie had initiated its coverage in the cement space, and this was one of their top picks as well. So stock's up almost 3%. We were talking about Ambuja as well. The company will be declaring its earnings tomorrow. So ahead of that, there's been some positive tick coming about, up 2.5%. Rajat, since you're positive on the markets and you still think that domestic institutions will continue to support our markets, tell us what are your top investment themes in this new Samvat?
Yeah, so in terms of themes, I think metals as a sector will do well from this year until next. I'm really positive on metals. I'm really positive on IT. I've been positive on IT and pharma both. So amongst the top 3 sectors, I think it would be IT, pharma, it could be, and it will be metals. Now, there's a lot of sectors which have done really well in the last 1 year. BFSI, Telecom, for some strange reason, a sector that I've been really negative on, and it beats me completely why the stocks in the telecom space continue to perform well. I guess the reason could be there's one Reliance Jio that's come in and that's changed the game, and now there's Bharti Airtel and Idea Vodafone, which are both trying to play catch up. And people are not realizing that Jio has a lot of money coming in from refining and petrochemicals, so they can be a real disruptor. At the end of the day, there will be some survival of the fittest in this sector, but personally I've stayed away from this. I don't understand what's going on in this sector, so fairly negative on telecom. On BFSI, I'm positive on a few stocks. Federal Bank is one stock which I've held on to since about 88-90 levels, and I've added more at about 124 last week. I really like the numbers. I think this is a bank which is going to benefit the most because they've not only cut their exposure to some of the stressed sectors. They're a bank which had a big amount of their loan book invested in construction and infrastructure, and there's a lot of revival in that space, so their margins could continue to improve. I think this quarter alone their net interest margin jumped about 23%. Besides that, in metals there's a small company called Ratnamani Metal Tubes. That's a stock that we've recently added, and what I like about that stock is that more and more mutual funds have shown interest in this stock. So again, a lot of SIP money will come into this. But besides that, this is one of the only companies in the metal space which has no debt. So if you look at it and compare it with its top peer in the industry, and this is number 2 right now, they have a similar net profit number while their total sales, the operating sales, are 1/3 of the top guy. So their revenue is 1/3 and their net profit is the same because they don't have any finance cost expenses. So I really like these kind of companies. So that's another company that we've recommended. In IT, I'm really bullish on a large cap IT. Last 6-8 months, they've not performed for many reasons. Infosys and TCS still remain my top picks. Pharma, again, I think Pharma, a lot of these large cap stocks which have formed a bottom now, Lupin and Sun Pharma, should do well in this next 1 year. So I think for the next 1 year, these 3-4 sectors are what you should look out for.
Well, you've also got the power stocks which are up today. So pull up Torrent Power or even Adani Power. Both these stocks have seen gains of between 4 to 5%. Hemant, on the charts, would you recommend taking position in any of these stocks?
Torrent Power looks pretty good, Navneet. We were in a 1.5 year range between 160 on the downside and 250 on the upside, Navneet. Now we've finally taken that out today. So logic says that we are heading clearly towards 300, but this would probably it's probably a 1 year call, not a very short term call. In terms of Adani Power, it's been we've had a few hiccups. Currently, I think it's holding on for dear life. I have a feeling that if it doesn't close below 27, things are okay. But if these things need to change, we need a weekly close about 33.50. So currently, not only Adani Power doesn't seem exactly positive. Maybe it needs some more time to consolidate. On a decline, I think Torrent Power seems like a clear bet if one were to compare both. Maybe the situation improves for Adani Power in the future, but not now.
Not now though, for Adani Power. But now is the time for some small caps, and Nikki Mirchandani joins us with the small cap stock of the afternoon. Nikki.
Hi, so Zuari Agro is the one that we're looking into. It has locked into an upper circuit of 20% after reporting a stellar set of numbers. Now, volumes remain high, as much as 14 times the 30-day average volumes on NSE. If I was just supposed to quickly run you through the quarterly earnings of this company, the net sales have risen as much as 87% on year basis to 1,315 crore as compared to 704 crore. EBITDA has grown, jumped nearly fourfolds to around 128 crore in this quarter as compared to nearly 33 crore in the corresponding quarter of the previous year. Margins have almost doubled up to 10% as compared to 5%. PAT has grown multifold to as much as 54 crore in this quarter as compared to 0.27 in the corresponding quarter. So what goes behind the making of these stellar numbers? So well, we have good revenue growth which has been reported by the company along with the good operating performance which has aided the bottom line growth of this company. If you look at the employee expenses, that have also come down substantially for this company. Also, besides that, we are looking at the tax credit of nearly 28.41 crore in this quarter as compared to tax credit of nearly 0.25 crore, nil almost, for that matter, in the corresponding quarter of the previous year. If I'm just going to be talking about this company, while it's a small cap company as we just spoke about, it's a 2,841 crore odd market capitalization company. The stock performance has been stellar itself. If you see YTD performance, the stock has risen as much as 160%, and on yearly basis the gains are almost similar.
Big results for Zuari Agro, and it's showing in the way the stock has moved. As Nikki said, stellar performance by the stock and by the company in terms of the reported numbers as well. No surprise there, up 20%. Rajat, a quick word here. Zuari, do you track this one?
No, Neeraj, I don't. I was just listening to it right now. I don't.
Okay, I won't put you in a spot then, Rajat. We'll talk about some other pockets that you probably track as well, but it's 3:15, so that time of the show where we get you what dealing rooms are recommending in the session today. Yatin Mota and Darshan are here with their channel checks. Okay, who should I start with? Yatin, let's start off with you. What is it that you're gathering from your dealing room sources?
Yeah, you should always start first with me because I have a better hit rate. But, talking about HDFC Bank, that is one stock which is on a decent tear versus the market conditions, of course. Now, what we are gathering from the dealing rooms is that the quarterly results could surprise on the upside, especially on the asset quality side, and a lot of dealers are accumulating this particular stock. And also, we have domestic funds which are nibbling into select private sector banks. Apart from that, in the mid-cap space, so to say, Mass Financial recently listed market cap close to 3,500 crores. What we gather is that large FIs are buyers in trade and dealers are recommending buy to their clients with a 10 to 15% short-term upside. So this is one stock on the radar. And in the mid-cap space, watch out for IOL Chemical. That stock was up 20% in the last trading session. Today also up nearly 15%. And dealers indicate that marquee HNIs are buyers in block deal today. Darshan?
Okay, as they say, the best is left for the last. So these are the stocks that dealers are talking about. Bharti Airtel and Idea, the telecom space is in focus. Even on Muhurat Day, when the market was rather weak in trade, both these counters were doing well. The sentiment on the street has turned positive post, numerous initiatives that had happened with Jio. Jio reporting a positive EBIT, taking a price hike. So it seems that the worst seems to be over for the telecom sector. So accumulation is definitely there. The entire space is beaten out of shape. So they believe that the potential upside is much higher on the telecom stocks. The next counter that dealers are talking about include Biocon. The numbers are there this week, but ahead of the numbers, heavy short positions are being taken by the HNIs. They believe that Biocon will report a poor set of numbers. Obviously, regulatory issues are also there for Biocon. So overall, traction seems to be there on the negative side for Biocon. And finally, the last stock is Reliance Industries. Again, a few FII funds are accumulating the counter. Today, the market cap in excess of 6 lakh crores. Serious amount of money seems to be chasing Reliance now, apart because there's no performance coming in from the other large cap counters at this point of time. So there is no other alternative combined with strong performance from Jio and Reliance makes Reliance a good bet by the FIS.
Yeah, well, it is this friendly banter that makes our segment so popular. Darshan and Yatin, thanks a lot for joining us today and giving us that perspective. So that's what dealing rooms are recommending in the session today. Navneet, you have an opinion. Should we save the best for the last? Should you want to give some opinion or some update about what stocks will enter the F&O space or get out of the ban list?
Unfortunately, I think the list is going to remain status quo for tomorrow, because I was just checking the data a while back. There were stocks like Dewan Housing, Jain Irrigation, which were on the top in terms of, which could enter, or rather Dewan could come out. But the options and even the futures activity is not suggesting too much whether there could be any change or not. So I'll reserve my thoughts there for today.
Let's not ask Jayesh to reserve his thoughts, though. He joins in before we get in closing strategies from both our esteemed guests. He joins in to talk about what are the key factors that one should watch out for in terms of trade tomorrow. Jayesh?
Neeraj, it's going to be an earnings heavy day and dominated primarily by the Nifty company earnings. So we have 5 of them lined up tomorrow, starting off with Ambuja Cements, where we are expecting a margin expansion to come about. Moving on to Asian Paints, where the volumes are expected to grow in the mid single digits. Then we have Infosys. This will be the interesting one and the big one to watch out for. After Nandan Nilekani has come back to Infosys, the first time they're going to report quarterly results after market hours. That is, also watch out for Z Entertainment, where the key number would be to focus on the ad revenue growth, and followed by HDFC Bank, where we are expecting a steady growth to come about. So that's the Nifty results that we have. Apart from that, we have other big names like ABB India, Canfin Homes, ICICI Prudential, and the likes flashing on your screen. However, we will also be watching out for some of the earnings call that these companies are scheduled to host, starting with HDFC Bank, Asian Paints, Infosys, and ICICI Prudential. However, all of them will have their earnings call after market hours tomorrow. So any positive or negative surprise, the stocks will react only day after.
All right, so it's going to be an earnings heavy day tomorrow. But talking about the earnings, Havells, which came out with its numbers, the stock's actually given up all the gains. It's trading at day's low. Let's just pull up the chart. It's slipped into the red. Remember, on the top line, it was a miss, but operationally, the numbers looked good. Rajat, do you track this one, Havells?
Yes, I do. In fact, I have Havells as a disclaimer. I have this in my portfolio. Look, I'm not going to look at this from a quarter to quarter standpoint. I like this business. I like these consumer-centric businesses right now, and I think this is a market which will continue to grow, and Havells is a leader in this market. So there is no doubt in my mind. I think a lot of the competitors have eaten into Havells' market share, whether it's Finolex or some of these other cable companies, but Havells is the only player which has diversified as much as it has. And I think going forward, the market size, as it keeps growing, there will be substantial growth in terms of both the sales volume and investor interest. So this is definitely a stock, if you were not looking at life from 2-week, 3-week kind of perspective, is something you could hold on to your core portfolio.
Okay, 320, maybe a couple of minutes over that. Let's get in some closing strategies from both our experts. And Jay, let me come to you first. Your top closing call today.
Well, it's on United Spirit Futures. I think the stock has clearly provided a breakout from an inverse head and shoulders pattern, had achieved the conservative target of the same, retested the neckline of the bullish pattern, and I think it has also reversed after retesting it. The indicators are absolutely in the buy mode. So I think the probability of this stock, inching towards the levels of 2600 till the expiry day is quite high. On the low side, I would say that 2450 is a very crucial support. So with that as a stop loss, I believe that United Spirits is a good buy. The risk reward is absolutely in favor of the bulls, and it's 1:2.
Amen. Your top call.
I'd say buy the Bank Nifty futures.
I want you to repeat that. I haven't heard. That's like music to the ears.
I'd say buy the Bank Nifty futures, which is quoting at around 24,116. Keep a stop loss just below 24,000. I'd say we'd see a 150-200 point rise in the next 2 or 3 trading sessions.
Yeah, and that might be critical for the index as well. I've kind of, and I'm sure others are doing that too. But almost every single day in the morning, I've been talking about how the Nifty Bank not playing ball is resulting in the Nifty looking ever so sluggish. Yes, you can have a Reliance and the telcos participating, but the Nifty Bank doesn't, and you have a problem there. And in today's session, I think Himen is right. The Nifty Bank participating, and that's leading to the index doing well too in the second half of trade. I think identical chart for the Nifty Bank and the Nifty in the last half an hour of trade. So do watch out for the Nifty Bank in the session today. It's an earnings heavy week for the banking space, Rajat. If you had to bet on a private sector bank, and I will omit a Kotak Bank and an HDFC Bank from that list, would you bet on any of the others?
Absolutely. Again, we've already done that. I just talked about it. Federal Bank is a bank that I really like right now. And I just gave out the reasons that, this is a bank where you see they have not only reduced their exposure to a lot of the stressed areas, but a lot of the areas where they had exposure, which is one construction and the other is infrastructure, which is where they have a substantial portion of their loan book, about 36% a few quarters back. This figure is a little dated. Now, these sectors have started making a comeback. And if you see, it has started getting reflected in the way their net interest margins jumped in the results that they just declared. So not just for the results that are likely to or that are yet to come out, but I really like Federal Bank as as a long-term bet in the BFSI space, where most other things are looking fairly expensive. So within private sector banks, Federal Bank I think is going to be my top pick. I've bought it at some 88, 90 levels. I've added more at 124, and I recommend this bank to anyone who's looking to buy something and hold on for a good period of time. Neeraj, one more thing that I'll just add. We were talking about sectors which I think could lead the market for the next 1 year. Now, this may not be 1 year or 2 years, but one sector that I missed out talking about earlier, where I have positions, is the power sector. I just heard somebody talk about it, so I said, and I was quite surprised with the way India Energy Exchange's IPO listed today. So, if you missed out on this IPO, did not get allocated, which is unlikely, but if you did not apply for shares there, this is one company or this is one business that I really like, because, this is not only a monopoly, but this is a business which in times to come will be really needed. All that needs to happen is that the government needs to allow private sector players to buy more and more electricity directly from the power generation companies. And once that starts happening, you need a platform for that trade to happen. And I think I'm really positive on this. But again, oftentimes on TV shows, when you talk about things, investors are looking for something which they can just, a piece of news which they can use just in 2 weeks, 3 weeks. What I'm talking about is fairly long term. I really liked the business. I really thought that, I was surprised that it had such a, soft listing.
Well, Sunil, Hyotech from the broader markets, that stock seen gains on back of good volumes today. It's up almost 12 to 13%. Sunil, Hyotech is the stock that I'm talking about. In fact, one of our viewers had sent in a query with regard to this stock. We couldn't address it at 12:30, but I'll take this question to him in. On the chart, Sunil, Hyotech Engineers, how does it look?
Frankly speaking, Navneet, it's given a breakout today. 14.4 was the earlier intermediate high. We had a range between 12.4, 14.4, closed above the 55-day moving average, closed above the 55-week moving average, has overcome a supply line. Weekly indicators are positive. Stock looks good, looking set for a further upside. Looks good.
Okay, so the stock is looking good on the charts. What's providing support to the index today are a couple of your heavyweight IT stocks as well, which will be declaring their numbers today. So the likes of HCL Technologies, Infosys, and even Wipro, which has already come out with the numbers. All these stocks have seen good gains. Before I go across to Neeraj, just quickly, Jay, on the charts, any trade on HCL?
HCL Tech, you ask?
Yes.
I don't think so. There's any trade out there for HCL Tech. You know, this stock is quite a laggard, and I would say there's quite a lot of noise on this stock, so I would like to avoid.
All right, so avoid HCL Tech is the call coming from Jay, and let's head across to Neeraj to see how the closing is panning out. And Neeraj, we had a good rebound in the opening session, but after that the index slipped. So not a bad closing. We're still closing in the green.
That are there on our pillar. Nifty Bank is up about 0.5%, and that's leading to this move in the Nifty and the Sensex as well. So 0.5% apiece. The broader end of the spectrum is an interesting one. It was very, very flat when we started the show at 2. The mid cap and the small cap indices will come up on your screen. I would reckon that there is some upsurge out there in the small caps as well. Marginal ever so, but yeah, some bit of an upsurge that has come in. But it's essentially large caps and the Nifty Bank, which has led the index to do what it is. What I would presume, yes, Reliance is participating, less cement is participating, and those names will be there. But look at that list. Bharti and Reliance top the list of gainers. Surprise, surprise, Coal India is up about 2.5%. But a clutch of banking names. The ICICI Bank, State Bank of India's of the world are doing rather well. HDFC Bank is up about 1%. And some Infosys, HCL Tech, Tech Mahindra and some of the others have done rather well for themselves. The losers list, it's a pretty strong one as well. There is heavyweights like HDFC, which is down about 1.25%. HUL has some losses. Cipla down about 2.5%, and Axis Bank continues to grind lower about a couple of percentage points. So selectively, some banks have some losses, but the Nifty Bank clearly a standout performer in the last half an hour. What about the broader end of the spectrum?
Well, there were a lot of pockets which saw a good amount of gains. Let me first start off with the earnings reaction. You had stocks like Havells, which came out with its numbers today. Well, on the top line, it was a miss, but operationally, it was a beat. And in fact, the stock saw some sort of traction, but towards the end, there was some sort of profit booking which came about. So finally closing the day with cuts of almost 1%. Graphite India too came out with its earnings. Well, largely it was factored in, the numbers will be good. Therefore, you did see some profit booking coming about. No major reaction there on the stock. The other stock which was locked in upper circuit was Zuari Agro because of the tax credit. You saw that bump up coming in the bottom line. And lastly, Hindustan Zinc in terms of earnings reaction, that too the numbers were pretty much in line with what the street was estimating, but you saw that profit booking coming about. Well, Neeraj has been talking about throughout the day about the real estate stocks which saw a good amount of bump up. In fact, the mid-cap realty counters, Suntech, Kolte Patil, Purvankara, you name it, and all these stocks saw good amount of buying momentum. The telecom stocks were in focus. In fact, the top two F&O gainers were also Idea as well as Reliance Communication. Shree Cement from the mid-cap cement space saw that jump in just in the second half of the session. That stock was also up. In fact, Shree Cement saw gains of almost closer to 6% towards the end. And lastly, new kid on the block, IEX. The listing was pretty much debit, which we got to see. In fact, towards the closing also, Neeraj, the stock's seen cuts of almost 1.5%, despite of being a market leader with 98.5% market share.
The FI buying too, if at all it came about, failed to come to the rescue of IEX, Navneet. Yeah, but that's well summarized. Quite frankly, I just have to add what the contributions that various stocks have done. As we were talking about, it's a mixed bag for financials. So HDFC, Kotak and Axis Bank are making sure the index loses out a bit. As opposed to that, there's some bit of strength in ICICI Bank and HDFC Bank. So HDFC Bank and ICICI Bank negating that pull and push between the financial names. Had it not been for Reliance, which has contributed in a big way, and to an extent Bharti Airtel, which is now at 8-year highs, we could well have been in the red. So credit for we ending in the green could also in part go to the price hike done by Reliance Industries on the Geo platform. That's probably come to the rescue of the markets. The heat map would probably show even Stevens. The market breadth would also show even Stevens. Yes, actually it is 50-50 in terms of gainers and losers on the index. As you can see, about 25 stocks on the gaining side, 25 stocks on the losing side, so nothing to choose from. But more importantly, the market breadth would have looked tepid. I think if you bring up the advanced decline ratio, it will still look tepid because it was the Nifty Bank and to an extent Reliance which took the index higher, but the broader end of the spectrum fairly tepid, more declines than advances. Let's see if this changes during the course of the week, simply because it's an earnings heavy week. I just want to bring up the turnover picture and just see if indeed it's above average or pretty much at par. So technically the first day of the new somewhat, you have at par volumes as well in the session today. Nevertheless, final thoughts from our experts. And Himen, I just want to come to you first. Good call on the Nifty Bank. I think some option trades too worked out beautifully.
So, lucky enough, the 24,300 call option that we recommended at the start of the show at 2:30 Neeraj was quoting around 69. It ended at 90. So I think luckily a decent move. Thanks.
All right, Rajat, what would your closing thoughts be today on the show?
No, as I said, really looking forward to how Infosys posts results tomorrow. I've had this in my portfolio for the longest time. I think by now everybody knows that I'm looking for Infosys results tomorrow. So that's one stock that I'm looking out for. But barring that, I think I'm going to stay invested in wherever I'm invested. The stocks that I spoke about, the sectors that I spoke about, banking, I've talked about Federal Bank. This is a stock that I'd like to hold on. In metals, I really like this small company, Ratnamani Metals, which we just recently added, Infosys, and in power stocks, I've had a few power generation companies in my portfolio for a long time. The only thing that I'm staying away from right now is really telecom and cement, because those are two sectors which pharmaceuticals, I've got Lupin and Sun Pharma amongst the large cap pharma space which I have in my portfolio. So I think these are the sectors that will do well going forward. One more thing, if I may add on telecom, I think what's happening right now is really a battle between refining / petrochemical company versus all the other telecom players. Now, I don't know how long can this go on for, but there's nothing fundamental about this. So I think this is one space where, no matter when you get in, you can, ride the wave, ride the bull, but you never know when this reverses. So I just heard someone say worse is already over for telecom space. I don't know what they mean by worse. I think the worst has got it's got horrible now, because now the pricing pressure on these companies is even more. You've got Airtel sitting at some 70,000 crore of debt. What kind of worse is over is something that beats me. So I've just stayed away from this. But yeah, that's that.
Okay, thanks a lot for that, Rajat. Thanks for joining in today and giving us your thoughts. Jay, the Nifty Bank, clearly for me, the standout performer. Do you think there is more in store tomorrow?
Absolutely, Neeraj. I believe that with today's positive close now, I think it's quite possible that at least we see a retracement of the entire fall, which we've seen almost from 24,800, 900 till the lows of 23,900 approximately. I think at least a bounce back till 24,400, 450 can't be ruled out. If at all, if it manages to take off those highs of 24,450, then I think it would again inch towards the upper end of the range, that is 24,900, 25,000. Else, it might just stay within the range of say 24,400 on the upside to around say 23,700 on the low side. So that's 700 points range, at least for this expiry week. So I believe that it's going to be quite interesting whether it closes above or below this range.
I just want to extend one final question from mine. Maybe Navneet has more too, but the small cap metals pack, and I'm just not referring to the event-based moves that happen in Bhushan or some of the others. Sandur Manganese, Moil, and a couple of others too went up. Do you have any thoughts on this pocket? Have you looked at any of these stocks?
Moil looks good. Sandur looks great. I think it's seen either we are on the cusp or we have almost broken out of a multi-month, multi-year pattern. So not a very short-term call, but if you have a one-year view, I think Sandur is just beginning. Looks great.
Okay. You were mentioning, Himen, about watching out for some result-based companies as well. There are a bunch of IT names, there are a bunch of banking names. What would you watch out for the most on the charts?
I think Mindtree looks positively interesting, Neeraj. I think that we are in an uptrend. IT is looking good, and this should do better.
Okay, watch out for Mindtree. That could be interesting. I think the numbers come out in a couple of days' time from now. So do watch out for that one as well. It's a heavy IT earnings next 2 days. Remember, anyways, we'll talk about this later. But Wednesday morning when you come for trade, you'll have to contend with Infi numbers, which will come out post-market hours tomorrow. And you'll have to contend with HCL numbers, which will come out pre-market hours on Wednesday. So it should be interesting. A Wednesday morning's trade for IT. Time for a short break though on Countdown. We'll return with more news on the other side. Heymen and Jay Thakkar. Gentlemen, thank you so much for taking the time out today and joining us.
Are we live?
Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
Just business news, we're news for business people.
Watch us live in conversation with Ramdev Agarwal on our next episode on the power of compounding.
The concept remains very simple. Businesses are compounding machines, so you need maths which matches with that. We will talk about the next level of compounding and how we work in actual life.
Watch us live with Ramdev Agarwal next Tuesday 11 a.m. as we discuss the power of compounding in the process of investing. Send in your queries using the hashtag AskBQ to BloombergQuint.com. Write to us now. Use the word Ramdev in all your queries.
Welcome back. While you're still watching Countdown with us on BQ Live, let's take a look as to how the markets panned out today. Well, clearly, we started pretty strong. It was a good rebound from the sort of cuts we saw on the moderate trading day, but just in the initial half an hour to 45 minutes, you did see some sort of selling pressure coming about. But once again, in the second half, as you can see on the intraday chart of Nifty 50, there was some bit of recovery coming about. Nifty finally closed below the 10,200 mark. But remember, it was off day's low because we did touch lows of almost on 10,130 thereabouts. Well, in terms of broader markets as well, clearly the advanced decline ratio today was in favor of the declines. But there were some pockets which clearly stood out. A lot of earnings reaction also coming about. Let me just start off with first the Nifty contributors today. Well, we did see once again the traction coming back in terms of telecom stocks. So Reliance Industries was your top contributor today, contributing almost 14 stocks, 14 points, pardon me. HDFC Bank, Bharti Airtel and ICICI Bank were a couple of other contributors. So what dragged the index lower or what capped the moves was the heavyweights HDFC, ITC as well as Kotak Mahindra Bank, followed by Axis Bank, where the weakness actually continued today as well. In fact, Axis Bank is heading very closer to its 52-week low. In terms of earnings reaction, you had Havells, Graphite, Zuari Agro, as well as Hindustan Zinc. These were the stocks which came out with the numbers. Havells saw some sort of profit booking towards the end. Graphite India also, the numbers were largely factored in, but look at Zuari Agro, its holding company Zuari Global as well, were locked in upper circuit in today's session. The realty stocks stood out. Suntec, Holte, Patil, Purvankara were also up and about. Well, on that note, let's also see how the European markets have been faring today. Bloomberg's Sandra Kiloff joins us from the London studio. Hi, Sandra. Tell us, how is it looking for the European markets?
Well, we're very much seeing investors here in watch and wait mode, waiting for the next big development in Spain. Of course, Catalan separatists planning their response after Prime Minister Mariano Rajoy moved to stamp his authority on the region. This is very much fueling a stall in European stocks today. The Stock 600, Germany's DAX, up just 0.5%, while the FTSE is pretty much flat, and Spain's IBEX continuing to underperform again today. If we look at stock specifics, Philips has rallied 1.8% after reporting third quarter profit rose 12% as it got a boost from sales in China. The Dutch health equipment maker saying that adjusted earnings before interest, taxes and amortization increased to 532 million euros. Sales rose 4% on a comparable basis to 4.1 billion euros, missing analyst estimates. Meanwhile, here in London, Spire Healthcare Group has soared more than 12%. That's after rejecting a takeover proposal from its biggest shareholder, Mediclinic International. The British private hospital operator says an offer that values it at £1.2 billion significantly undervalues Spire and its prospects. And Spire has strongly advised shareholders not to take action in relation to the proposal. If we take a quick look at currencies, the euro has dipped 0.2% to 1.1757 against the dollar. That's the weakest level in 2 weeks on the back of those concerns surrounding Catalonia, while the British pound has risen 0.1% against the dollar. And in fixed income, Germany's 10-year yield has declined 2 basis points to 0.44%. That's the biggest fall in a week.
Well, Sandra, many thanks for taking the time out and speaking with us today. That's the word on what's happening across the world. Clearly, Spain is the big concern. But on to the Indian markets and what's the big earning to watch out for. We're still watching out for Indiabulls finance numbers. They'll come out a bit later on today. The numbers, as I remember Shraddha telling us in the morning, would be par for the course, in line with probably what the street would be working with. But she's here with what the street is estimating. Shraddha.
Well, yes, Neeraj. So the earnings trajectory is expected to continue for Indiabulls Housing Finance. We are expecting the numbers to come out anytime now. But broadly, in terms of numbers, the net profit growth is seen coming in at 20% at 822 crores. Loan growth is seen at anywhere between 27 to 30% in line with the recent trends that we have seen. And asset quality is expected to remain stable. So gross NPAs in the June quarter were at 0.8%. So that's the kind of NPA number that we're looking out for. So of course, broadly, what will be most important to watch will be the continuation of this AUM growth trend, especially in the light of RERA and the recent slowdown in the home loan segment. Also, the movement in incremental spreads will be important to watch given the sharp home loan rate cuts. Asset quality trends is another thing that we'll be watching, especially in the corporate and the LAP segments. That apart, the company had also shared on exchanges last week an update with respect to its 30% investment in Oak North Bank. So we will also be looking out for some color on that one. But broadly, the earnings trajectory and the growth trends that we have seen in the recent quarters is expected to continue, Neeraj.
All right, Shraddha, thanks a lot for bringing us all those details. Well, ahead of earnings, the stock of Indiabulls Housing Finance saw cuts of almost 1.6% today. But all eyes will be on Infosys earnings tomorrow as the IT giant will report its September quarter earnings. Well, Lakam Vakil is joining us to tell us what the street is factoring this time around.
Well, Navneet, in what is a seasonally strong quarter for the entire industry,
it is going to be a muted quarter for Infosys, considering we are expecting about a 3.5% growth when it comes to dollar revenues. We're also expecting a contraction in margins at around 23.4%, and consequently profits could grow by only as much as 1.3%. But the big question is whether or not we can expect a downward revision of the guidance. Now, as per the management, have guided for 6.5 to 8.5% for revenues for FY18. But UBS has said the revision of the top end of the guidance is already factored into the price. But UBS, IDFC and Kotak institutions all are of the opinion that a downward revision of the lower end as well cannot be completely ruled out. That said, what is it that's going to bear down on this particular quarter? Well, softness in BFS and retail. There will be margin headwinds as well on account of pricing pressure, as well as full impact of wage hikes. But the real question, perhaps the biggest question of them all, will be how does Infosys place itself in terms of strategy and updates in terms of its CEO search. On the whole, we are expecting a muted quarter for Infosys.
Okay, and well, thanks a lot for that, Agam. It's back to Shraddha again, because while Indiabulls may come out with numbers today, HDFC Bank will come out with numbers tomorrow. And Shraddha, I'll be surprised if they don't post another healthy quarter.
Absolutely, Neeraj. So we expect that trend to continue, and I mean, there are usually no surprises which are expected from HDFC Bank numbers. The last June quarter was of course an exception when we saw a significant spike in agri slippages which caused a rise in gross NPA, but this quarter is expected to be absolutely steady as far as all the operation parameters are concerned. In terms of key numbers, net interest income is expected to grow 20% to 9610 crores. Net profit is seen growing by about 21% to 4171 crores, largely in line with the 20% growth trend that we have seen in the past few years, whereas net interest margins are expected to remain stable around that 4.4% mark. When it comes to the loan growth, again, it's the 22% kind of a number that the street is working with, especially led by a higher growth in working capital, the healthy growth in unsecured loan book, and also certain retail portfolios on account of the early festive season. When it comes to asset quality trends, again expected to be steady. Gross NPA in the June ended quarters to that 1.24% on account of the spike that came in because of agri NPA. So that's one thing that we need to watch out for, as much as we are also going to watch out for trends as far as the commercial vehicle segment is concerned. Trends in digital and digital banking and payments will be watched, and the overall outlook on the balance sheet growth and economic recovery is yet another thing that the street will focus on, but no surprises expected for HDFC Bank.
All right, no surprises expected. Thanks a lot, Shraddha. But this number will be important and could be market moving, as HDFC's weightage on Nifty is almost 10%. Well, it's going to be an earnings-heavy day. From the FMCG space, you'll have Asian Paints, which will be reporting its September quarter earnings. Yash Upadhyay has been going through what the analysts this time around are expecting from the country's largest paint manufacturer. Yash, what are you tracking?
Good afternoon, Navneet. So it might not be a great quarter as far as Asian Paints is concerned. Revenues are although seen growing by as much as 13.5% to 4,273 crores versus 3,763 crores, and volumes, which had taken a significant hit in the first quarter of FY18 on account of GST, may see some improvement, growing in the mid-single digit space, anywhere in the range of 5 to 6.5% at the higher end. Consumer demand, analysts expect, has not yet fully recovered in the second quarter of FY18. Price hike would be a key factor aiding the top line growth of 13.5%. Prices did see an increase of as much as 4.5 to 5% during the quarter. EBITDA too is seen growing by as much as 9.9% on a year-on-year basis. EBITDA margins may see a slight contraction of around 60 basis points, and this is on account of the higher input costs. Now, we've seen that the titanium dioxide and other monomer costs have gone up in the quarter. Although they did see some bit of correction in the recent couple of weeks, the benefit of that would probably be seen in the third quarter of FY18. And lastly, profit is seen growing marginally by as much as 4% to 514 crores versus 495 crores in the preceding quarter of last year. This would also be impacted on account of the increase in the effective tax rate from 31.5% in the pre-GST era to now anywhere in the range of 32.5 to 33.5%.
Okay, thanks a lot for that, Yash. So that's Asian Paints. We'll watch out for that. Well, Energy Efficiency Services Limited, or EESL, was recently in the news for placing orders for 10,000 electric vehicles with Tata Motors and M&M. The public sector enterprise, which focuses only on energy efficient practices, has big plans in the near future. Bloomberg Quint Sajid Mangat caught up with the company's MD, Saurabh Kumar, and started off by asking him about EESL's business model.
Invest in any project or equipment that saves energy, and that energy saved is monetized, and a part of that cost savings is used to pay back the investment. This is the typical energy service model. We call it the pay as you save model, which means that in case your current energy bill is, let's say, 100, I'm giving a very simple example, and we come and make an intervention and your energy bill starts going down to 50. You pay us, let's say, 30 rupees over a 5-year period, 30 rupees every month. Whatever is the initial investment, let's say it's 500 rupees, is something that I will put in, and I make sure that you continue to receive that, deliver that savings of 50 rupees per month year and till such time the project is under completion. At the moment, if you look at the Electricity Act, the way it is structured, only a distribution licensee is allowed to sell power. Now, if there is if you want to really promote e-mobility in the country, you would need to have petrol pump-like charging infrastructure managed by public-private partnership or private sector. Now, that at the moment is not allowed as per the Electricity Act.
All right, let's also head across to Jayesh Kilnani to take a look at how the commodity markets are trading today. Jayesh?
Let me start off with gold prices, which have actually tumbled to a 2-week low. The last time I checked, spot gold was trading near the 1275 mark. Now, a few reasons why the demand for safe haven has been on the decline. Now, we have seen some strength come about for the dollar, which has strengthened against the other developed currencies. The dollar going up does not bode well for the gold prices, which have actually come down. But moving on to base metals, we saw some bit of negative bias on the Shanghai Futures Exchange. Most of the base metals, ended the day in the red, except for steel prices that actually jumped approximately 0.5%. Now, the same on the LME base metal index, we are seeing some bit of rebound come about over there. So in morning trade, most base metals are trading in positive. Moving on to oil prices, we are seeing some bit of stability come about for oil prices near the 52 mark, and for Brent at about 57.50. Now, Citi has come out with an interesting note, which has a comment that OPEC and Russia should end the output deal cut that they have by the year end 2018.
Okay. Thanks a lot for that, Jesh. Well, buying on dip strategy has worked really well in the liquidity-driven market, says Andrew Holland, CEO at Avendus Capital. In a conversation that I had with him earlier, he further says that the US fiscal tightening could only result in short-term hiccup for India.
We're sitting in, as we have been now for some time, liquidity-driven markets, not just in India but globally. And you try and work out and think about what will burst that bubble. And in the past, nothing has really kind of burst it. It's been temporary kind of falls, and the buy and dip strategy has worked very well. But as we come towards a tightening in the US, not just through interest rates, but also through the balance sheet tightening, then I just wonder, how the bond markets will react to that, if there could be any kind of, turmoil in the bond markets, which we haven't seen. If that was the case, then obviously, you'd see a lot of money which is kind of come into emerging markets, bond markets, being quickly taken away, and that exacerbates kind of currency depreciation, and that could throw a few wobbles for the equity markets as well. So that's really the biggest concern in the short term. But longer term, we stick to our view that both globally and locally, we remain very positive about the kind of mid to longer term. But the shorter term, liquidity-driven markets do throw up nasty surprises, and whilst we haven't seen any yet, as markets keep kind of climbing higher, the risk becomes a lot more kind of severe on the downside.
Andrew, I'm jumping straight to some of the newsmakers before we talk about the broad macro as well. I have a couple of questions there. But Telecom, I mean, what's happening? Just when we thought that the price wars could get a bit ugly, Reliance Jio ups the tariffs. It probably gives, at least the market believes, the incumbents some leeway to increase prices as well. But more importantly, this whole consolidation now leading to a 3-player market, and people believing that, hey, could this be a start of pricing power returning back to a very small player participated industry? What are your thoughts on telcos?
Well, I think you've actually summarised it very well in terms of where the market's kind of now thinking more positively. Our view was that Reliance probably had another opportunity to squeeze a little bit harder, but they decided that that's not what they want to do. So, you're right, it gives a little bit of pricing power, it gives a little bit of kind of lull, but I wouldn't be surprised if Reliance don't come back and just tweak their aggressiveness again, just to take some more market share. So, whilst we've become less negative on the telecom sector because it has been going through its pain for over 3 years now. I think the initial part of the rally was on accounting differences between, say, a Bharti and a Reliance, and if you kind of put the same accounting norms there, which I'm not sure I would be so fundamentally kind of approving of, but it's worked for the sector. The sector's been under-owned, unloved, and you've seen these bounce back. But it's going to take some time for this consolidation to work through. And I still think there's, I wouldn't be chasing at these levels. I think it's had a reasonable run, and I think there's probably better sectors to look where you can see the earnings visibility a lot higher without some very aggressive player who's trying to get his market share.
All right, with that, it's a wrap on this edition of Countdown. Thanks very much for watching the show. It's goodbye from Neeraj and my side. Don't go anywhere. Coming up next is What Did You Miss?